The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Monday. Geez, the days feel so weird with all these holidays. Monday the 29th of December. And, yes, just about wrapping up the year. And remember, if the market survives September and October declines, very often you close at or very close to or within a very short distance of the year's all-time high or recovery high. That's kind of what we're looking at here. Wow, what a resilient market this is. Instead of being down about 35 points in the Dow, 5 points in the S&P, 10 or 12 points in the comp index at this particular point, which is what I thought we would see, I'm absolutely seeing right now limited upside, but the downside is going to be so far, the downside has tremendous support. And the way they're rotating into areas all the time. Those cyclical stocks are helping the Dow maintain an upward bias. This is quite incredible. So look at the E-minis I'm showing you. Instead of pulling back to make a peak C today, we went quickly from an A to a B to a C every other day. And instead of having today 25 cents less than the 2088.75 high of Friday, we've tied it. Look, there's a 120-minute chart, a little double top forming. Amazing, just amazing. So let's go through the numbers. Well, first of all, thank you, Steve and John, for a couple of great hours, and we're going to keep doing this all day. Got Larry Pesavento coming up straight after my show. We just want to have you get educated, understand what the market's all about. I did a chunk of work. I have to tell you, I really spent time on charts over the last couple of days, not the last maybe week or so, but especially the last few days. And let me just remind you again, I wonder if I can get it up here, because if I don't say it now, you just know that by the time I move on to within 30 seconds of a new thought, I will have forgotten. Remember, tomorrow night's the night, formerly the Boston Investors Business Daily Meetup Group. No, it is the Boston Investors Business Daily Meetup Group. It was the IBD group. We're going to be meeting tomorrow night. I'm the guest speaker. It is the annual holiday festival that we celebrate, and I'm the guest speaker it's at Building E51, room 315, 70 Memorial Drive, Cambridge, Mass. You can just you can either take it off right what I'm showing you here, or you can go to the Boston Investors Business Daily Meetup Group, and you can get the information. Tomorrow night, Tuesday night, December the 30th, and we have a great time. And the questions that come up are just fascinating. And I can think freely. I can just move wherever I want, and it's great to do that because I can spend time going to areas that normally they don't come up, or I just don't get to spend that kind of time on them. Okay, so let's move that away, and we will look at the E-minis up 4 at 2088.25. Now let me just run the numbers. I'll run them with the charts. You've got the INDU. This is the Dow. Oops, what happened to the Dow? Right there, click, click. INDU. Up 8 at 18,062. The high that was made on Friday, which is leg A, will become peak A if 18,103.45 is not taken out. You either hit that 0.45 exactly, or you go to 0.46. It extends leg A. You have to have a penny lower today to make a peak. And look at the MACD. MACD is strong. The stochastics at 95%. It is rare that you will just get a complete sell-off when you've only just gotten to 95%. However, if for whatever reason by, let's call it a week or maybe five to six sessions, if within that time the Dow plunges below 17,800, 17,881 is the 9-period exponential moving average, then I would see the stochastic probably go to about 87. Constantly breaking 80%. If it does break 80%, that is a real problem. Let me move that away. The weekly chart is in leg C. Now, it's very interesting because I've got a number of I've got a number of wave counts in the S&P's a little different. Let's do that right now. SPX is, at this point, it's up 4 at 2,093. This is leg A in the daily, and it's leg B. So it's one behind, ahead or behind. It's the Dow's ahead because it's already in C in the weekly chart, and the S&P is only in B. And I'm going to go with a unified top. So I'm expecting D. And D cannot occur until sometime mid-January at this particular rate for the S&P. Leg E in the monthly chart. In the Chapman wave methodology, when you get to D, E, or F, you've got to start saying, hey, let's be a little bit careful here. So right now, this is absolutely fantastic. It's saying that the earliest we can get a D in the daily on the S&P or in the Dow would be, it takes 7 days. So the S&P has just made a new recovery high. I'm going with the S&P rather than the Dow. The Dow will have an extra letter at least. So that means if tomorrow there's a peak A, the very next session on Wednesday, there's leg B. Then on Friday you get peak B. Monday you get leg C, Tuesday you get peak C, Wednesday you get leg D. It means that Thursday a week is the earliest that you can get a peak D. That's if every other day we see a new high and then a peak and then a new high and a peak. Okay, we've got that out the way. So the parameters to watch is tremendous resistance coming up, but it'll only be in leg B in this area between 18,001. It's called a 130 to 18,171. That's the up channel resistance in the Dow, and in the S&P that exact same level in the weekly chart takes you to 2105. And right now it's at 2,093. And this is still only leg A. Hey, this is a very good action. I can see us running into January. Unless there's just some aberration that says, uh-oh, we are going to plunge because of this, whatever external event it is. QQQ series, right now, leg C, it's a little bit ahead. You go on ABC, and it still hasn't taken out 106.25 for a recovery high above the peak F top that was made in the daily, and that would start leg B in the weekly chart. So far that too is positive, and the key support will be in the QQQ series at 105.23 up 19 cents right now, would be 104.27, the 9-period exponential moving average. Let's go to gold, GC15, and you've got gold plummeting right now, down 14 at 1181. I see nothing. I'm just telling you now, this is not an inflationary period. I just don't see anything. I don't want to be fooled by this. I don't want to be messing around when the trend is down. And when you look at the GC contract, the continuous, look at the monthly chart. Monthly chart had a doji candle last month. And if the low is taken out this is a continuous contract of 1131, that's not good. You'll be going to the probably the 1,087 will be the February of 2000 low that we'd be looking at to test. 2010, I meant to say. So we've got a caller online. So let me just finish this up. You've got TLT right now. Was up earlier. It's up again. It's up $1.15 and 125.56. I must tell you, those interest rates, they're just stuck in this range. The Fed is afraid to do anything, and that's a good sign, at least for interest rates. And right now, the bonds are saying that that peak D that was made at 127.72. I'm looking at this and I'm saying the 128s to the 123s are kind of the parameters that I'm looking at for the TLT. And I think I've covered high-grade copper. Someone asked me about. Yeah, I think high-grade copper is trying to start basing. I don't think it's a base yet. It's just attempting to do it. The monthly chart is just horrible. commodities. These are all commodities. Look at crude oil. Come on, trying to rally. Woohoo! It's up 28 cents. Oh, man. This crude oil chart is just not a happy chart at all. Crude oil needs to break into the, it's at 55.02 right now. It needs to break into the 59 area to really show that it has bounceable energy. We'll be back with some of the questions in the den. I want to go to Sam in Philly. Sam, how are you?
Good. How you doing, Basil? How are you?
I'm good. Thank you.
Happy New Year.
And absolutely a Happy New Year to you. Thank you.
I'd like you, when you get a chance, take a look at SGMO.
So I've never looked at this. This is Sangamo Biosciences, and it's just a typical biotech stock that has sudden sporadic moves to the upside and then pulls back sharply. But it did go peak A, B, C, D. It made a peak E top at in March of this year at 24.69, plummets down to, I believe that's the 32-period moving average. Let me double check. 50-period moving average. And then what happens is it goes down to $9.39, and then it spikes up earlier this month to 16.93, and now it's, and then it pulls back. So I'm going to ask you a question. Because it's a biotech stock, we understand that there are cyclical moves. Most of the time, you look at U-shaped patterns in the smaller biotechs. Why? Because news-related events spike them up. But normally, you also look at these sharp lips on the right side of the cup formation pulling back to the base level. Well, the base level in this case was the 200-period moving average that it hit back in October, the week of the 17th of this year, and now it's gone ABC, it's gone to a peak C, and this time it's showing that there's a pattern that this particular stock likes to make. SGMO trading at 14.75, up 12 cents, and this is the first time it started to show on the right side that it is making a stair-step move with higher highs and higher lows. That's what it did all the way to the previous stop that it made back at 24.69. Now it's saying, I'm trying once again to make a U-shaped pattern. What evidence do you have to say that it's going to go to leg D in the weekly chart because it's made a peak C? So that's what we'll be talking about. But here's my question. Sam, do you have a position in this?
Yeah, I own it at $15.
So you've got a position at 15. So did you buy it recently, or you've sat through pain?
Recently.
Okay, good. Okay. Because anybody who bought it before at $15 saw it go down to the 9s, and that's not a happy situation at all. So now you've got the right aspect, because you're looking at the right side of the chart, which says if certain things can happen, I'm going to try to go for each higher level. So we'll talk about that. We'll be back with Sam in Philly right after this break. Basil Chapman, Dow's up 5, S&P's up 3, and I'll be right back with Sam in Philly.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, folks, we're back. And we're back with Sam. We're looking at SGMO Sangamo Biosciences. I'm not sure I'm pronouncing that correctly. I just looked up. I do this periodically with the biotechs. I just have a little fun with this because the information that it gives you is just kind of general information. It's how the information is used and how you can perceive it works within the stock itself. So I'm looking at the net share purchases activity, the insider purchase of the last 6 months. It's really fascinating. It's a little complicated, but what I'm looking at here is that there were a lot of shares that were sold, but within that there are also shares that were dispositioned, non-open market at different price levels, sometimes at 14.74, sometimes 15. Some don't even have a price that it shows you at. And we're talking about 37,000 shares. That's not an insignificant amount, but it is if you're talking about the millions of shares that are actually owned by the partners themselves. So when I look at that and I try to put it together with the stock, it kind of confirms it a little bit in a way what I often look at, and that is the cycle of spikes to the upside. So now let me put that aside and say, within the context of that, I still think that the Chapman wave within the methodology that I use of looking at Ds, and you can see I've just done that with the daily chart. It's made 2 peak Ds, and the second peak D has had the deepest, not necessarily the longest yet, consolidation. And in the monthly chart, you're only in legs. The weekly chart has made a peak C, and the bar of last week and the candle of today, so far that's really good. So I'm going to make a couple of recommendations. First of all, looking at the monthly chart, there is enough evidence to say that now I'm not sure that you want to hear this because I just have to give you the numbers and then we'll do more of an analysis. But 13.70 is a 9-period moving average, and on a biotech stock, even though it's a huge percentage coming down, at 10%, it's not fun to see that, even 8% or even 12%. Even if it's going back to recovery highs, it's kind of tough to sit through that. But sometimes with a biotech stock, like I often have callers who say they understand the fundamentals, it's a cancer reduction, or it's a stock that's involved in multiple sclerosis or whatever it is, and there are trials coming up, etc. And you understand that it could be really whipsaw. Eventually, the outcome has to be one of a really strong, powerful move to the upside to make profits, because that's kind of what you want to garner from biotechs. Otherwise, you wouldn't waste your time, because the declines are always so sharp in percentage terms. With that said, what I'm going to offer you is, you're down just a little bit. What I'm going to recommend is, this is for you. You've done is this a technical thing, or you've done some homework on the stock? You like the stock, you like the company, and this is a position you'd like to try to hold months rather than days.
That's correct. Yeah, I'd like to hold it. I believe in the company, and I want to stay with it.
Okay. So if that's the case, then I'm going to make the recommendation, and what I'm doing, it's only a recommendation, and what I'm going to say to you is, if you like the company, and it's a biotech, and it's just part of your portfolio, it isn't, you haven't put all your money in it, this is just a part of your portfolio, then I'm going to make the recommendation that the level that I'd watch and I'd maybe take a little bit off is somewhere in the 13.91. If it closes under 13.91, I'd say, you know what, maybe it's not quite ready yet. I'm going to take a little bit off. It'll be a little bit of a loss, but that money I'll put back, and I'll explain what I'd say to you. If the 200-period moving average at 13.06, let's call it $13, that's going to be really important for a number of reasons. Why? Because if 1370 goes on the weekly chart, it's under the 9-period moving average. That pullback last week to me was the low that was made last week of 13.91. That shouldn't be taken out. This week you should see a climb, an attempt to try to get above a trend line resistance, that's a downtrend resistance that starts back from the 12th of December at 16.93. So if at any point it's able to sneak its head above 15.22, that'll be a good sign. If it can close above 15.35, that's a very good sign. That's what I'd be looking at. And once it does that, then I'm going to say to you, from my eye, just eyeballing it, I would suspect that SGMO, if it can get to the 15.35 level, then all of a sudden you're looking at a really nice cushion between $14.50 and $14.20, $14, somewhere around there. That should be the cushion going into mid-January. Now, the whole thing about this, to get to leg D, it has to make, and I'm giving it a time constraint now, it has to get above $15.80 by the last Friday, the second week of January. If it's able to do that, that's really good action. So let's look at it again, maybe in 4 or 5 days' time, but I think you're on the right track. It looks like a nice stock to hold. Thanks for calling.
Thank you.
We'll be back in a moment.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. I just wanted to mention one thing with SGMO, which I didn't mention before, and thank you, Peaky in the Den. That it is, where did it go? Did I just, SGMO is zinc-fingered technology working on cure for HIV and hemophilia. So it's just interesting. Now, it is a biotech company, and that's the reason why I wanted to give my concern if it went under certain levels, and what would be really positive if it broke out on the upside. The general trend right now is still up, but I didn't like the depth of the candle after a peak C from last week. That was my only concern. That's why I mentioned the 9-period moving average in the weekly. Let's go to Don in Odessa. Don, how are you?
Hey, Basil. I'm doing good. How about yourself?
I'm well, thank you.
Thanks for taking my call. I've been looking at this stock for a while. It's Rentech Nitrogen, RNF. I got to take your picture. It's confusing me. It's delayed.
Okay.
On the daily chart, it looks good, like it's reached a bottom, as well as the weekly. The monthly, it's got a little bit high volume. But I'm thinking about making an entry around the 980 mark. What do you think about that?
Now, is this Rentech?
Rentech Nitrogen.
Rentech. This is Rentech Nitrogen Partners.
Right.
Now, I drive by a place periodically, just fairly near me, called Rentech. First of all, I didn't see the name for years. I always wondered what was in it. Rentech, and they do. They are pest control. So I wonder if it's a different company.
I don't know. I honestly haven't looked it up. I thought it was a fertilizer company.
A fertilizer.
It's,
All right.
it's in my fertilizer watch list.
Yeah, okay. If it's in the fertilizer, you know what? It looks like a fertilizer stock right now. We don't have to go into the technicals, but it certainly has that characteristic.
Yes, it does.
And fortunately, there is no odor coming from the screen. But right now, this is the first bounce in the monthly chart. It's had no bounces whatsoever. The weekly charts had one A minus that was just back on the 14th of November, and then it took the left side low bar out, and it went all the way down to a beautiful little doji candle at 875 on the week of the 19th of December. That's 3 weeks ago. Now, what's really interesting is that the rally that it's just had from a low of, it's trading right now at 10.12, down 22 cents. The low that was made at 875 on the 16th. Now, you see, this is the thing coming off lows when you're in the single digits. Any move up is a fabulous percentage move up, and it sounds just wonderful, but it's not when you say this is a stock that was trading in February of 2013 at $49.18. So that puts it into perspective. So this is a bounce. And it's the first real bounce. Now, from the way you spoke about this is a stock that you haven't yet put any money in. You've been watching it, and it kind of shot up, and now you're looking at it and saying, okay, have I missed the move, or is this just the start of a move that's going to take it to about another 1.5 to 2 points higher? Is that the question? Okay. So if you haven't got any right now, here's my suggestion. You've been watching it for a long time. It's on your list. Maybe you didn't watch it regularly, but you watched it enough to know that it was going down, going down. This is the first time that you're looking at it, and for a period of a week and a half, it's actually been having higher highs and higher lows. That's really a good sign. That's on the daily.
That's right, on higher volume, too.
If I look at the 120-minute chart, it's really not this is not a great chart at all, but it is a start to a change in trend, and it's only a change in the short-term trend. However, the MACD for the first time is showing relative strength. It's showing that it has got a right side, a divergence, a positive divergence, and yes, the stochastic is doing the same thing, not the on-balance volume, which is a bit of a concern to me. So this is what I'm going to suggest to you, and I think I hear the music's about to come up. You know what, I'm going to take, just during the break, I'm going to take a moment because I'm going to recommend 2 or 3 steps that could be taken, because one will be, if I'm wrong, what do I do? Other one is, if I'm right, what do I do? So if you can hold on, you'll hold on?
Absolutely.
All right, great. I think we're about to go to a break. Did I? Oh, did I not hear a break? Oh, a long way to the break. I'm not sure what I was looking at here. It must have been a very long weekend for me. Oh, we don't have a break. Okay, so we're going to continue with this. This is what I'm thinking. At $10.12, I'm sure I don't have to say to you, this is not one where you want to put all your eggs in one basket.
Oh, of course not.
It ain't Easter yet, and this is not the time to do it. So what I'm looking at here is that there's a chance that if this does not break 9.74, the 9-period exponential moving average, in fact, if it doesn't even break 9.96, I added this the other day because we had Garo talking about a moving average. I think he's 21-day. I put that in, and I was going to take it off because it was getting a bit messy. And then I thought, you know what? It actually has it's given me a lot of information. I'm going to keep it for now. So 996 is the 21-day period moving average, and right between there, caught between 996 and 974, that had better be a containment area. It had better be a springboard area if it even gets there, because this is a stock that if it's turning the corner, it needs very quickly to get to about, it needs to break above the high of Friday, 1050. And not only that, it needs to hold above the little cluster of highs at 1080, 1075, that area. So here's my recommendation. Because you watch it very closely, and because both of us know that this whole sector has just been in a terrible, terrible downward, it hasn't been a swoop, it's just been a consistent failure pattern. It's actually, if it was upside down and positive, it would be extraordinarily positive. So this is the exact opposite, extraordinarily terrible. And I'm going to suggest 2 things. One is that you nibble right here at 1013. And I do say nibble. If you're going to buy, let's say you're going to buy 200 shares, I would only put in 25 or 50 maximum. I start a position. Why?
Okay.
Because there's a lot going on for the trend to change. And if the trend changes, one of two things is going to happen. Out of the blue, within the next 2 days, there's just going to be a flurry of buying in this whole area. Let me see if potash is doing anything here. It's probably almost, yeah, potash is holding, but it's not acting great, but it's holding. And AGU, yeah, it has this is the pattern that we're looking at. So now let me go back to RNF. And I'm not even sure I spoke about the symbol itself. Rentec Nitrogen Partners, RNF, trading at 10.13. I'm going to suggest that you start a position here, and if it goes to 10.51, that's a penny above Friday's high, you can add another small position. Now you've got two small positions. And those two small positions are feeler positions. Why? Because if it manages to break into the 1050s, preferably the 1060, 1070 area, then you're in position, and the next pullback, and now we're talking about now we're going to talk about the weekly chart, has a 9-period exponential moving average of 10.64. It has not closed above it except for 2 times back in July period, and it couldn't hold it. It just did it once, and then the next week it was starting on its way back down under the 9-period moving average, and the following week it tried it, and it was just a failure. So it's not been able to hold above the 9-period moving average, even though it's tried to spike above it, not at all. So that's why I don't want you to get a full position. I don't want you to even get a half a position, just a small position, an entry position somewhere around here. And you want to see how it acts for 2-3 days. If within the 2 days or 3 days it suddenly pops up above 10.51, you can add that other small position. And then what I would like you to do is you call me, because it'll take a few days to do that. Maybe by then it's Friday or Monday of 2015, first Monday of 2015, and we can look at it again. And I'll tell you why it's only a small position. If this thing takes out $9.60 or $9.50 support in the next 2 days, it's just saying, oh, I am not ready. I'm not ready at all. And I don't want you to be in more than a small position for that situation. And what I would do is I'd even say to you, normally if you're just going to have a very small position, I'd make the stop wide. I don't want to do that here. I'd make the stop 9.60. No, I don't want 60, 70 cents. I'm just going to suggest if it gets back to 9.74, 9.70 area, that you just tighten up, make a stop 15 cents or something. Why? Because if it takes it out and then fails, that's just horrible looking. And if it doesn't take it out, but it treats that as a springboard, that's the kind of action that you want, that it gets close to where you're about to exit, and instead it turns around and it moves higher. Why? Because 974 is the 9-period moving average, and it's treated that like a hot wire before, and it kept failing, and now it's a positive. It's trying to treat it as a staircase, and that's what you want to see. So I've given you information that at least you can use to your benefit, and call me in a few days. Let's see how it's going.
I will, Basil. I appreciate your time here.
Thank you very much. And I think you might have got at least the first weekly attempt to last more than 4 or 5 weeks on the upside. Maybe this is the time that you actually start to see a move that really takes it towards the 12 area, and that'll be a big positive, at least in the short to maybe intermediate term. Thank you for calling. I appreciate that.
Thank you.
Thank you, Don. So let's go back to the market. I had a bunch of questions. Now, I wanted to talk about a couple of things. For my opening call, what I often do is I feature real estate or anything I actually wanted to do. When I was in New York, there was a fantastic article on the kind of expenditures that companies are, and then in Boston the same thing, kind of expenditures that companies were outlaying for the Christmas season, or this is called the holiday season. Here in Boston, one of the companies actually hired the Boston Symphony Orchestra. I mean, you're talking about $120,000 for an hour, a couple of hours, an hour or two. This is extravagant stuff, and they've just started doing it, and that tells me that 2015, I'll be talking about 2015 a lot. I think this is going to be a really interesting year. I'm not sure this is the year of the big top, but I'm absolutely sure that this is the year that we're going to have a big percentage decline at some point. Does it come from much higher up? Is it like that cartoon I drew years and years ago where the wife turns around to the husband and says, why are you so glum? He says, well, I've been waiting for a 10% correction. The market's moved up 20%. You know, that's the kind of thing that happens when you're waiting. We had that happen to us today with 3 stocks. One stock we wanted to add because we had a fantastic gain. We have a fantastic gain, and we took some profits, and then we tried to get back in, and I changed my – and I should never do this, ever. I promised myself never to do this. I had to buy this particular stock back, the half that we don't have, at a certain price on Friday. It didn't get there today. I thought, you know what? It could pull back a little more, and I've got so many others that we want to buy. I better share it. I don't want to have everything. I don't want to put more into this one stock. And it hit the number exactly, and now it's up. It's up. Let me find it if I can. Yeah, it's up. So it happens. And then 2 stocks we wanted didn't get to our buy point, and both of them are having very nice sessions. That's okay because we got some stocks that are doing fantastically. In fact, all our stocks are doing well. One in particular is a real surprise to us, and it's just moving beautifully to the upside. Actually, no, I shouldn't say that. They are all moving very nicely to the upside, but we're not as fully invested as we would like to be. And I'd like to be. I'm waiting for a pullback. I want to be more invested. I like this, at least into mid-January. I've even called it a 2 to 3 week rally that we want to participate in. We'll see what happens. So now look at Amazon. I had a question about Amazon. Look, Amazon, nice move. This is a move where that says, look, the holiday season's kind of finished. Maybe it's not kind of finished. Maybe it's finished. And now you got the givebacks, etc. But I don't think so. I think that there's a chance that they're going to keep this going because they're going to have sales and sales and sales. I don't know where they're going to go with the sales because some of the sales were very good. Some of them are not that great, but I think that they're going to have more sales. And Amazon might be the beneficiary in some ways. So right now I got Amazon at 314. It's up 5. And I suspect that if it's able to get to 317, between 317 and 318, that the 321 200-period exponential moving average could be hit. And if it does that, that's going to be really important because it depends on what letter it does that. And that'll help or hurt. It depends. The MACD and stochastic and the daily, which are not that great. They're good, but they're not that great. So the next question was LinkedIn, LNKD, LinkedIn, one we had, we don't have anymore. This is at peak E in the weekly chart, made a peak D way back in the monthly at 257, plunged down to 136.02 back in June of 2014. Now, this is going to be very interesting because a lot of these stocks that I'm looking at have got very nice moves in their daily charts. Some have stair-step moves like LinkedIn. Just makes a cup formation and then drops, and then another cup formation and then drops, but each time it makes a higher high. And that what this is saying is I'm moving higher, I'm moving with a trend, but at this particular point I'm not showing breakout action. Breakout action in LinkedIn would be trading at 234 down 37 cents. A breakout would be getting into nicely above the high that was made recently of 243.25, getting somewhere into 246, 247 area and holding. That's really the issue. And holding, that would be very good. So we're watching all these bounces take place. I wanted to do something here. A couple of things I wanted to mention. All right, I'll do that when we get back. I just got to remember to look at the rentals in Boston. All right, we'll talk about that when we get back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, yes, listen to Larry. It should be a wonderful program. A lot of things are happening, and I'm just really wanting to hear what Larry says about these commodities, which seem to be very, very weak. And when will they start to turn, and what is he looking at? So in the meantime, back at the ranch, what we're looking at here, I showed for my subscribers, I show this type of chart very often whenever it comes about. They're cumulative. It's not one chart. It's not going to make any difference. It says right here, and this is an article by this columnist Shirley Ling is her name, and it's titled "To Solve Housing Woes, Mass Must Think Big." And it has Greg Bialicki, the outgoing state housing development secretary, proposing a $1.5 billion mixed-use development like Somerville's Assembly Row. 1,800 apartments at a time. Just, you got to do that. And I'm saying to myself, oh man, come on. You know, we're going to have a glut of, look around. I mean, just throughout you see buildings. You're going to have a glut of housing. There's no question about it. Look, this is what we've got. This is the stats so far on the building. It says building fewer homes. Yeah, we've been building fewer homes. Actually, you've been building more homes if you look at it from the low of 2009. But it hasn't got back to the 2005 highs of 8,000 something. That's not the point. It's what's on the books. And she says Governor Patrick hasn't done enough, and etc. Now, I'm rather intrigued. We've got a real estate writer in the Globe, and we've got this financial columnist, and they are really bright. They really get to the nitty-gritties. I admire their writing. I admire their thinking. But I also look, every time they talk about certain things, I look back and I say, gee, they don't have the history. It's not their fault. They just haven't been around long enough. And therefore, they are part of the thinking that says only look forward, because looking back, and then they look back only at a short period of time. And they need to have looked back a long time. And history's just repeating itself, especially here in Massachusetts. And it's going to be part of what we look at when we're looking for our major top in the market. So the XLF was a question. I don't know if I'm probably skipped about 3 things that I was asked about before. So the XLF and the KRE. KRE is the SPDR S&P Regional Bank Index. It's acting very well. The weekly chart says it's trying to get back to the 42.79 level. That's $1.50 from where it is now. It's in leg B. I call it gray B because it is under the previous high. There was a peak F top in the monthly chart. Will it make a U? Will it recycle? Will this become an instant restart D right at the 200 period exponential moving average? And we only see we're in leg C if we go to 42.40. And we're in leg C in the daily right now. So the XLF is the one that I said is acting really well. We wanted to buy it much earlier on and just kept getting away. And now I have to wait. And it's acting very well. I would have liked to have had the XLF at 25.07 right now, up 11 cents. I would have liked it around about 24.50, just to have that comfort level, because I think it will be pulling back some. It's a very nice uptrend in the weekly, but the weekly says that there's a lot of resistance at the 25.42 area, which is not that far away from here. But it is an uptrend, a decisive uptrend, nice MACD, nice stochastic, and the monthly chart is really broken out. I like the XLF, and if you look at Goldman Sachs and some of the others within it, they're acting well. Goldman, they have to call this leg B to be leg C at 198.07. We'll see what happens there. So, okay, let me just give you a quick summary of what I'm looking at and why I'm looking at it. I had a question about the VIX. Yes, it's absolutely imperative to be looking at the VIX. Why? Because it's trying to bounce today. It's up 92 cents when the general market is actually acting quite well. Aha. So what are we looking at? We're looking at the 200 period moving average of the VIX at 14.57. It hit that. It always has a little bounce. So here was the one I'm looking at. I am anticipating a little bit of a pullback here. We're going to get a peak A in the Dow probably today, but we might get one in the S&P tomorrow. And then it's just a pullback. And from there, we might start another buy mode. I'll talk about it more tomorrow. Hey, have a great day. Check my opening.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.